So as you know, I am Rajan Gadkari and I'm a quant. So by definition, people like me are nerds. And but I'm basically a quant. In other words, I come finance later. In fact, when I became a quant, I didn't know anything about finance. And I entered the finance industry as such at the age of 47. I don't know if I'm giving away my age, which doesn't matter, frankly, at this age. But I've spent a lot of time in finance, as you can tell. But what I find in my life, quant, mathematics, is a religion, it's a discipline. And if you look at it that way, it makes you basically an analyst that can analyze anything, any phenomenon. And therefore, our strength is math, which is a discipline. So if we start looking at that no matter what problem comes up, you should be able to approach that. Because when I got my first job in finance, which was in valuations, my boss was a sales guy. He was the best sales guy I know. But I didn't have anybody to tell me what is finance, what is valuations. Then when I moved into risk management, I had the same situation. My boss was the president of Merrill Lynch's FX bank. So obviously he didn't know anything about it. But you can definitely find answers if you have a discipline to find answers. So what I wanted to do today was to give you an idea about what kind of jobs are out there, but also I wanted to tell you why they are there. So I want to get a brief understanding. How many of you have a mathematical background? How many of you have an economics background? Okay. How many of you have finance background? Okay. Have any of you applied whatever your background is in finance? Okay. And lastly, have any of you kept in touch in the last 10 years of the advances and downfalls in finance? Okay. Because what I have done, I like the first one, is I have chosen a topic that says 2008 credit crisis, then followed by that the regulations, and then the opportunities for us, the quant people. That is what I wanted to discuss. But I wanted you to get an idea why this happened. The first slide. Okay. So, what I would like to do today is to talk about what exactly was the crisis. What happened during the crisis? Why do we call it a crisis? And many people say, and I will try to explain it, please feel free to ask me anything in between if you don't understand it. Most of the crisis happened due to very bad lending practices. So there was a mortgage crisis and there was also a derivative crisis associated with that. So then I want to get into what was, why did it happen, and what was the reaction of the regulators what was the reaction of the corporations to respond to the regulations. And once I do that, you will start seeing opportunities for people like us. Because all over, there was a feeling now that this happened because obviously there were a lot of frauds committed, but beyond that, there was no control. And that's where everyone started coming out with different ideas of controlling. जैसे कि बोलते हैं कंट्रोल का माहौल हो गया पूरा. And at that time, you find opportunities for all of us. And I will discuss that. So let's talk about what was the crisis. Next one. Yes. The first thing that happened, by the way, the stock market collapsed. Can we go a little back and forth? Is that okay? If you go down, then I'll try to avoid this as much as possible. But I have some pictures before that. One before that, yes. This is the stock market collapse of the 2008. You may not be able to read this, but this is 2009 as soon as Obama took over. But as you can see, it started just before he came. So the crisis reflected in everything. A lot of financial institutions closed. Does anybody remember the name of the financial institutions, investment banks that failed or were bankrupt? Lehman is a good name. Somebody said Merrill Lynch. Merrill Lynch and Bear Stearns were bought out by Bank of America and JP Morgan in that order at a fire sale price. And this guy Rajan Gadkari was working for Bear Stearns at that time. Bear Stearns stock was $120 and JP Morgan bought it for $2. So all these institutions collapsed, and we will get into why they did, but essentially they made commitments that they could not meet. Okay? So they had given out loans that were bad, and they had no money to meet that. So the junior Bush administration and the Obama administration had to bail these banks out. And together they spent almost $1.5 trillion to help them out. Okay? I don't know how much we have recovered of that. One other thing that happened is that it was a housing bubble at that time. And we will get into that in a minute. All of this bubble just went away. And housing industry tremendously suffered. Never in the past, and you can imagine now, for example, the real estate industry is good, right? The market for real estate is pretty good and it has been going up. What if all of a sudden it goes down by 30-40%? Nobody in US thought that housing prices will go down. In fact, all the models, all the analysis people did in investing in mortgages was based on the prices will go up, that there will be no losses. In fact, it was so bad that those people who took mortgages on their houses, they had to enter evictions and foreclosures. And overall, the whole economy went into a recession. There was tremendous unemployment. Many businesses were in bad shape. That was the crisis of 2008. Let's now get into the next one called what caused it. Okay? People have analyzed this issue, I think, for a long time. They still do. And you can go back to even Ronald Reagan or even Jimmy Carter. And I was there in US since those days, and I didn't understand it. But now I understand when they started reducing the restrictions on the finance industry, it had all the germs of all the crisis that was coming up. So you will see that Jimmy Carter did this, and Reagan did this, and Clinton did this, and everybody, in my mind, has contributed, though not directly, eventually for the crisis. And essentially what a Clinton, for example, would not allow the investment banks and the banks to get together. Right now there is no investment bank in the US. When I started in finance, Merrill Lynch was an investment bank. Bear Stearns was an investment bank, no longer. Even Goldman Sachs and Morgan Stanley have formed their whole thing under a bank. Does anybody know why am I making this issue bank and investment bank? Banks are very highly regulated and investment banks are not. In UK, there are no such thing as investment bank. They do investment banking, but within a bank. So they're highly regulated. Now in US, we don't have a difference either. The other thing that happened, generally a bank, when you have assets and you're trading and so on, you're supposed to have a capital to show that I can do this. So if I give you a loan and you don't give it back to me, then I might go bankrupt. So I have to have enough capital before I do that. So though the banks give the loans, they have to have enough capital. They did not have it. And this is where I want you to start relating to things. Many people built very complex financial products that were highly risky. And I think I might get into that when I get to the subprime lending, to the complexity. But because there is the complexity, many buyers of those products did not understand the product. After this crisis, I was asked to speak at an insurance company seminar in London, and they were saying, because they knew I was from Merrill, they were asking me questions about how come you guys made such risky products? And I said, that's because you're ready to buy it. I said, when you buy a shirt, you go to 3 stores before you buy it. When you're buying a security worth $500 million, you might as well try to understand. And there are complexities that are difficult to understand. So one rule my risk manager made in Merrill Lynch was, if I don't understand the security, I don't buy it, period. But that did not happen. There was fraudulent underwriting and lending and trading. So everybody on his own side was working towards the fraud to make it happen. There were at least 7 levels the fraud was committed. But the biggest problem in my mind was the regulators, the rating agencies. None of these people understood the products. They were very complex. And therefore, regulators could not find out the risk in it, and the agencies could not understand. Nobody could value them. Even when Obama and Bush tried to help these financial situations by putting in money, they bought all these risky securities, but they also did not know how to value them. Okay. So one of the things I said was that this happened because of subprime lending. Of course, nowadays in India, everybody has a mortgage, right? Am I right or am I? In my days, it was not. If my father were to buy a house, it would be cash. But now everybody has a mortgage. When you give out mortgages, when I bought my house, the rule of thumb was you put 20% down and your income, you get double your income. If you take your annual income, you can get a loan up to 2 times your annual income. Okay? And the interest rate was fixed or close to LIBOR or more. Subprime lending means instead of charging the interest rate at prime rate, which is normally what the rate the bank charges, they started charging below, as low as 1% or even 0% in some cases. And along with that came up this concept of adjustable rate mortgage. And adjustable rate mortgage means as the interest rate moves, you change the rate on that loan. But of course the rate was high and you are giving it at 1%. So in fact, the principal amount of the loan was increasing, as against it should decrease as you go on paying off the mortgage. So I'm going to give you an example of what was really happening. Loans were given to not creditworthy people. So I'm going to talk in dollar terms. Don't try to convert the money in rupees because I'm talking about a common man. A couple that changes linens in a Motel 6, which is one of the cheapest hotels you can live, makes about $40,000 a year or 45, like. So they make very small amount of money. Now a banker goes to him and he says, why don't you buy this $500,000 worth house? How can he buy it? It is very simple. If you give me $5,000 a year, which is 1% interest, it's yours. The guy says, but I know that after 2-3 years you are going to increase my interest. He said, yeah, at that time it will be 9%. He said, I won't be able to afford to pay. He says, not to worry. By that time your house will be worth $750,000 and I'll give you $200,000 more to pay my mortgage. So, guy making $50,000 a year is buying a $500,000 house which he ever could not have afforded without any money down. That loan now goes to the bank. The bank has a credit guy and he says, I cannot approve. He doesn't have enough income. The bank president says, don't worry about that. We are going to sell this to an investment bank that is going to come up with a complex product to sell it to an insurance company. So now the guy who sold the loan was at fault. The bank was at fault. When it came to the investment bank, they took thousands of these loans and created a very complex security with showing minimum risk here and maximum risk there. But nobody could ever predict what the cash flows would be. So they didn't know it either. Now the guy who was buying it didn't know it either. The rating agencies didn't know it either. So all the way these products went and they got sold. And when this housing bubble, there were houses all over, fell, the prices fell. So the guy who was hoping his $500,000 house would be $750 and he will get $200, didn't get that. And so when he didn't get that, he couldn't pay the mortgage. So he went into eviction and foreclosure. Now the bank goes bankrupt that gave him the loan. And the investment bank, which has sold the product to the insurance company, is losing all the money. And everybody is blaming the regulators and the rating agencies for the right reasons. The other thing that happened was there was this pressure of giving out mortgages that many private banks got. In the previous days, Fannie Mae, Freddie Mac were the government agencies who would get in. Now Citibank got in and Countrywide got in. And what they would do, they would get insurance from another company if any of these loans get bankrupt. Now what happens, even those insurance companies went bankrupt because they had to pay. So all people involved in a huge mortgage market, everybody lost tremendous amount of money and nobody really knew these products. I used to value these products back in JP Morgan, and you in a way have to go down to the lowest each loan in that. And believe me, I think one financial security would have like 5,000 different loans under it, and you have to predict it whether it's going to default or not. So it was a very complex one, but it was an opportunity at the same time for Quant people. Anyway, now what happened was there was a lot of problem in payments with US and others. So the Fed increased the interest rate, and as soon as the interest rate raised, the prime rate related adjustable mortgage rates increased, and therefore though the housing prices had gone up, they started going down dramatically. And at that same time, nobody was building anything anymore. So the economy had a huge problem, because once the housing market in US starts going down, building goes down, all the related businesses start going down. So yeah, that's fine. I want to get the next. No. Okay, this is the one. No, I have not yet gotten to that. I think we're up about. Oh, okay. Let's go down. Sorry about that. No, down. I want to get to derivatives. Not the picture. There's a slide, it just says derivatives.
Sir, I have a question.
No? No. No, it's after this. It's after this. Yes. So I talked to you about what I call as the credit crisis, what I call as the mortgage crisis. Same time, there was a derivative crisis. How many people know credit derivatives? Okay, so let me just briefly tell you what is a credit derivative. I was a chief risk officer or manager for Merrill Lynch FX. What it says is this: if you buy a security or a debt or a bond, as we call it, let's say you buy something worth $10 million because it pays you an interest. In US, 7% is a very high interest. So you buy it for 7%. I, as a risk manager, I go to say, what happens if the company goes bankrupt? You will lose all the $10 million, right? So he goes to an investment bank and says, I want to buy protection. I want to buy insurance that this company will not go bankrupt. So the credit derivative says that if you give me a premium like insurance, okay, say 2%, then I will give you all your face amount back if that company goes bankrupt, because it has a very small probability of default. Okay, that's a credit default swap. That swap, many people sold. Not only that, they sold back and forth without necessarily having the loan. And now imagine he's thinking, okay, I'm not getting the 7%, I'm getting only the 5%. It is still better. In the meantime, if that company goes into default, whatever 2% they were getting as premium is nothing, because they will have to give 100% back. And people like Lehman Brothers went down especially for that reason. They had made huge bets on CDS without looking whether they had enough capital to pay. Because who is going to think, this company is going to go bankrupt? But many companies went bankrupt, including Lehman. And Bear Stearns and Merrill Lynch were on the verge of going bankrupt. So, what happened was, in the case of derivatives, that crisis also happened at the same time, and in a way it was also related to the credit crisis. Okay, next one please. Any derivative is a contract between two parties. Whatever the contract is, just between two people. So it's not like a Reliance share that anybody can buy and everybody knows how much it is worth. So what happens is, nobody knows the value of the contract as soon as it is made. The contract may be for 5 years. In fact, this is exactly the business I got into. I built a team in India that valued all kinds of derivatives for people who had them in their portfolios. And as you can see on the slide, there are $700 trillion of notional amounts people had in derivatives. My bank had $25 trillion worth of assets. And they don't know the value, and they want to know. So valuation became an important for many other reasons, and we will also get into it, because it has to be independent. If I sold you that, I cannot value it because I may be biased. But anyway, the credit default swap, as I told you, failed, but there was another thing. I would buy the insurance because I have the security which might default. But later on people felt, if this company is not going to do well, the value of the swap will go up. So they would just buy and sell. How many people know about the options? Equity options, right? So generally people buy an option to make sure they would not lose if the stock goes down. But what if I just decided to buy and sell options? So instead of buying something for $100 and the option is for $5, I would just buy 20 options. And yes, there is a lot of leverage to make money, but the leverage can work the other way around also, which is what happened in the CDS market. That people were playing naked CDS that was not supported by any debt. Next one. So, what was the regulatory response to this? And the regulations came from everywhere. The president came out with something, the Congress came out with something, and they started demanding different things. Now this is where I want you to understand and pay more attention to that, because this is where we all can play a very important role. They made proposals about, the president gave them money, the banks. They came up with how to protect the consumer, how to reduce the executive pay, and so on, which is quite political on that. The most important thing was the Dodd-Frank Act. Dodd was the senator and Frank was the congressman. And they came up with a regulation that basically insisted on transparency in the market. Now understand what I told you. Derivative was a contract between two people. How can you get a transparency? There is nothing. So the valuation people became important because they had to prove that the value they came up with was the value it would trade if it were traded, though it was not traded. Okay? So he had to understand the market and then value it as of today. So there was a tremendous opportunity for the valuation people. But then the risk people were also asked to say, what is the risk? So immediately it wasn't only the valuation, but to judge the risk in securities that they didn't know about. And I still remember that many risk managers didn't care about the valuation. They would get the valuation, they would say, I got the valuation. All I want to know is how much it will change. But if you study any pricing process mathematically, a risk is nothing but a derivative on the value. So if you don't know whether the value is good or bad, you don't know if the risk is good or bad. So now the risk people started paying attention to this. And they started demanding very significant numbers. The other thing I found was, I was going to the board of directors in Mero every month to give them the risk profile. And the one thing they would ask me every time is, tell me the worst thing that can happen to us. तब मैं कैसे बताऊं ना? I mean, in general, I am a quant. So I say to them, I am telling you with 99% confidence that in one day you will lose at the most $10 million. And now, what do I say about 99 million? Because of probability distribution you see, for the worst case, the fat tail can go up to him. But I had to come up with a scenario about what is worst. With the probability, that time I came up was something like minus 27 power, 10 to the power, something like that. So, all I wanted to convey to you that even the people at a level who cannot express their feeling in any quant terms were still asking from quant people whatever they wanted to know. So the quant people involved here have to understand their language and interpret that mathematically. And if you do that, then there is a demand for it. Okay, let's move on. What was the impact of regulations? Firstly, the regulations now were insisting your valuation has to be independent. So there is a mutual fund and by the way, this is not so much for equities. And I have to admit that though there is a lot of quant work in equities, I have never done that. I've been in fixed income and derivatives. So unfortunately, for those interested in equities, I may not be able to say much. But option is a derivative, so you could look at it that way. The thing about the valuation, even in fixed income, the situation in US was there are about 5 million fixed income securities, and only 50,000 of them get traded in one day. Not the same, it could be anything. So how do you price the remaining 4,950,000 securities? Is where the valuation guy comes in. And he has to show by law the transparency. Why do you say that? Because based on this information and that information. And that has to be sufficient to all the regulators and the auditors. So, and as you start moving into the complex securities, you're trying to act like a trader. You are trying to give out a value as if it was a trade. So it's not easy. So the regulators started saying you have to price it daily instead of once a month. They started saying you have to find an independent guy. And they were saying make sure it's accurate. And nobody knew what is that. Okay? So everybody built their own ways of finding. Okay? And in that process, another word came up called vendor grading. So the guy who is receiving valuation from others now started saying, I want to decide who is better. But before you do that, you have to know what means better. See, this is where a lot of different opportunities are coming as against before. In the past, most of the opportunities were in research, and you would do a lot of statistical analysis and, heteroscedasticity, like that word. But now, whether you are middle office, whether you are front office, whether you are supporting the front office, whether you are back office, all of these people now need quants. Whatever they are doing, they need to do their job better. That's what they're doing. So, as I was saying, I had friends in middle office who in general were supposed to get the data from the trader, put it in the system and prepare a P&L. No longer that's the case. Now they have to be quants out there. The back office people would get valuations from me and put it in their system and it goes into accounting and all that. Not anymore. They are supposed to judge whether the valuations are good or bad. Okay, so you will see opportunities in all of this. Anyway, so now I want to talk about what is the current situation. Can we go down a little bit before I go here to the graphs? There above. Just one more. Okay. I think, I have it up to 10. So the crisis happened here in 2008, and you can see that the top one is the FX. All of the guys recovered except CDS. CDS has not yet recovered. Okay? And once you know derivatives, you will know that FX and IRS has a need for derivatives in a regular corporation. People have to pay floating rates, so they have to worry about the fixed rate. People do normally FX business. So there is a normal demand, and therefore they did get back. But CDS got hurt and it still stays hurt. And I'll be honest with you, I think as the regulations start coming on it, the margin for the CDS market will go away and nobody will trade. Because there is nothing, like I was saying, 7% to 5%. If the guy can make 4%, he's only making 1% profit. If there is more regulation, then that profit also is not there. Why would people trade? So I think CDS is on its way of extinct. So anyway, at present, the recovery is very slow, but there is recovery. So Obama is taking some credit for that. Financial sector has come back. I think in my Dow Jones slide, you will see, in fact, it has come up above than before 2006. So the market has come up. But there is a genuine weakness in the economy. The thing also is that the return, the money people are making is only the top 1%. The medium income is still low, and the poor are poorer. Somebody made this social study. Credit issuance is almost going down, as I showed you. IRS is down, up, because IRS had genuine need. Next one. So I think all of you are interested in discussing the opportunities in finance. And as I said to you before, they are in risk management, they are in valuation, they are in middle office, they are in front office, they are in investment banking. Now, investment banking field of US has not been offshored. And in general, that is a field for non-quants. My son is in that field, and I can never dare to say he knows anything about math. When he writes something in Excel, he thinks, right, he wrote a model. And and he doesn't know the word macros or something. So investment banking is not exactly a quant operation. But all the others are now very strongly using that. And many of these operations are here in India. And I think we can very well support them if we understand that. So let's look at what do we need to do to get there and what kind of skills we need. And as I started out before, I strongly believe math is our underlying discipline. Math is our religion, and we follow that. Because it is going to give us answers that even many people didn't think of. So it shouldn't be just that. I have a feeling that I will deliver. Okay, from A through Z, whatever I get. Okay, even if, like I said, there is a model there. Unless you understand the model, you cannot deliver on a model that is in the library. I want to ask anyone who has come across any financial product in fixed income or derivatives. Okay? Which derivative? Can you write the model?
No. Because I'm part of the middle office operations there, and the ones Excel files that we use, the model is already inbuilt there by the front office team in association with data technology. Then you can't make any changes to that.
In the quant religion, in the quant discipline, you have to know the model. When I was in a valuation team, and I have all these young people coming out of college joining, we had all the models there. I said the valuation ki puri ho gayi thi, and they just have to do the daily quote-unquote operations. But I would insist that they would write their mortgage valuation model, their CDS, their IRS models, either in Excel or in C++. I would insist that. Because that's the only way you can understand a model. Even if I give you, in fact in my preparations, I'm not going to do it today. For everything I go through the model, I teach the models. When I made the team, I just got the smart people. And they learned when I taught and Abhijit came and he taught, people learn. But if you want to learn a model, you have to. If you want to be a quant. If you want to be an op, you don't need to. But when you write that, I still remember this one woman came to me and she said, Raj, my model is not working, because she tested it against Bloomberg. So I gave her a hint that when we price it, we take an interval as small as we can. She was taking I think quarter as an interval. जैसे कि आपके IRS में भी, you may as well have a 3-month contract to pay back and forth in your cash flows. But you have to build the interest rate curve with the smallest intervals. Okay? So, it is very important in this world that we understand the models as much as we can and keep up with time. IRS में भी देखो simple चीज हो गई कि interest rates went down like crazy, and the cash flows of the interest rate were based on LIBOR. So now they had to change the model that there is a different discounting curve and there is a different cash flow curve. Even when I built the whole thing and we went to the first client, he asked us to change models. He said, I need this because my risk management uses that model. So you should be able to do that. So what I'm urging you is when you learn models, please try to see as many of them that you can do it yourself. I did discuss analytical model in mind enough, but I cannot stress more than that. You have to have your own independent thinking, no matter what comes to you. So for example, we write a model, we come up with something, and we do this. Now I have to know how good is it? And that question is a never-ending question. You know why? Because there's always something better you can do. So only an analytical mind will challenge that process. And if you challenge your own process, in fact, you would in fact improve. Now, one thing I noticed, and that is the only way to success is a team. And many people have an attitude that I am better than you, especially in the quant groups. And the moment you do that, you will not succeed as a team, and the team manager would not be happy with the guy with the attitude. Okay? So I don't know how to stress this anymore, but there is a feeling, and I go to a lot of people, no, I know this, I can do this. But it's a team. When I was interviewed back when, they only discuss sports. Now, I'm not good in sports, but I can talk about it, I think. But as you can see in sports, you have to take a loss. You have to pass the ball so that we can win. You don't have to shoot it. There are many things you learn, and it's the same thing. So please try to see how you can work as a team. You are not just individual going against each other. Now, one thing I'll tell you, my experience, I have hired one of the most excellent teams in India. And that team was awarded by the bank as the best team and everything. I still have problems with communications. Okay? And we Indians think we can speak well. Let me tell you one thing. In America, I have an accent. So if you think my English is okay, then not in America. I don't know about Singapore. Okay? So communication skill जो है वो कभी भी improve कर सकते हो. There was a lot of discussion about these call center people speaking good English, and they don't. I do get a lot of calls, and they don't. They speak better English than many Indians, and I agree with that. And they have been trained very well to sound like an American, which I appreciate, frankly. But we do lack good verbal skills, and we definitely lack written skills. We definitely, and people notice that. So much so that my top manager, I urged him to take a class in communication. By every standard, he's the most brilliant man I know. Okay, in both, in points as well as putting the whole thing together, which we have. So I think we should, when you go for a wedding here, you say, "Hum marriage ke liye ja rahe hain." Because we have only one word, shadi, or in Marathi we call it lagna. But that is like forever. wedding is only that day. People here don't make the difference. When they say, they will say, hey, where are you staying in America? I don't stay in America, I live in America. You live in India, you don't stay here. These are little things I'm showing you, so you will say that yes, your English is different. And that's not necessarily English, that is the way we have perceived to be. But if you want to appeal to an international market, and these things are not coming to you by studying, this is going to come to you by reading, by watching some of the things and so on. But communication skills are important, and I'll tell you why. Let's say you are the best quant and they hired you because you are the best quant. Your future opportunities will be in danger because you are not communicating as well as you want. Okay. I'm going to stop here. You can ask me questions.
Sir?
Yes.
During credit crisis, were every people made loss or were there few people who made giant profits from the credit crisis?
Should I repeat the question or everybody heard? Okay. Essentially, the gentleman is asking me, did everybody lose the money or did some people make the money in the credit? You said credit crisis means the derivative crisis or the mortgage crisis?
Whole recession.
Okay. Firstly, in the mortgage crisis that I talked about, yes, everybody lost money because it was a housing bubble that created the securities. Okay. Now, there were some people who did make money. Okay. But I don't consider that they made the money in a legal or correct way. Okay. For example, what I have heard was Bear Stearns when it was going downhill, and it went sharply down. Goldman Sachs shorted about $600 million worth of securities, and they did make money. So when people were getting, Bear Stearns, by the way, had a very bad name for trading something that they really couldn't. They didn't have the money. And so I was hearing from everywhere. Nobody believed it. But some people, yes, they knew. People didn't know much about Lehman, but about Bear Stearns people did know. Yes.
So do you think that, so the crisis that we faced in 2008 was also the US, deviating from the gold standard of, printing money back in 71, was also that a cascading contributing factor to that?
Your sentence eventually is going down, so I heard half of it.
Okay, so, what I was asking is that, do you think that this crisis, one of the contributing factors could also have been the US moving, or deviating from the, gold standard, of printing currency back in 71?
I don't think the 2008 crisis was related to that. I have gone far, and I've read a lot on this, up to about 78, Jimmy Carter days, okay? In 81, I think Reagan came, so 76 to 80. But whatever I have related to was the deregulation of the FDIC type banks and insurances, not so much the gold standard. Yes. Yes.
When people are looking to hire someone who is in quant or middle office, are they seeking for some experience, or they are ready to hire someone who is just learned about that, having a knowledge about that field?
Yeah. The question is related to in job opportunities. Are there job opportunities for fresh graduates or people out of colleges, right?
a different field right now, and he wants to just move towards that.
Okay, so let's put it this way: you're looking for understanding how to get a job or how to in finance if you are not in finance before. That's a very good question, and they're not exactly easy answers. Okay, so I can share some of the things that people are doing, but a couple of things here is the skill set. So what do you sell from you is a skill set, which is regardless of any industry. Okay, so you can say, I know Excel and I know macros and I can do this and that. That's number one. The other thing is people do CFA and all that. So people respect that, and people getting into risk management. If they do FRM and so on, people do respect that. In other words, they say he is getting in that direction, though he doesn't have experience. And they do want junior people, believe me. Okay. In my team, I did hire 5 juniors who would carry out the work of the quant, and then they were trained in the quant eventually to become one. The third thing you can do is like, has anybody been in asset management, mutual funds? Okay. People take a portfolio, okay, and let's say you take a crore rupees portfolio, hypothetical, you build it, and you show the performance of that portfolio for a year. And when you go for a job, you say, I have done this. I have no job, I just analyze this, and I invested this is my performance for a year. And if you have a model or a process or rules, you can use that 10 years back and say how that model works. So you do it yourself and prove it to them. What that shows, by the way, is not just your skill set, but your desire to get it. And people like that. Anything else? Yes.
Hi. Hello. Good evening, sir. So, what would be your advice to students who are looking to make a career in finance? I'm a student myself, and so if you are talking about, let's say, investment banking, now those kind of profiles, I mean, they are required. If we see the CVs of the people already working in the industry, those come up from the almost the topmost colleges in India. That's a particular scene in India. They come out of IIMs only those people I ever considered. That's a true fact about JP Morgan itself. So, what would be your advice to students who are not from IIMs but looking to get into that career side?
See, investment banking is a very lucrative career no matter where you are, okay, whether US or here. So imagine a ING is opening a investment banking something here, or even Goldman Sachs is coming for that. They have no problem paying them whatever the salary is, okay, whatever they require, but they want the best, and therefore they will go to IIM. So firstly, jumping on the biggest opportunity in investment banking when you are not there is not something I advise. Okay, I always think knowing yourself, जैसे कि संस्कृत में बोलते को हम, who am I, is important. Exactly where I am and where I fit in. Very honestly, I don't recommend investment banking to quant type people. Okay, because there the communication skills are extremely important. And not necessarily English or whatever. I'm talking about in any language, it's a whole different approach. The bankers I know, in fact, are liberal arts, international relations and political science and English and art history, you name it. It has nothing to do with math or whatever. Okay? So before you say, I want to do this, ask yourself who you are, where you are, and you go. Now, if you still want to join investment banking, and you know you're not going to be able to do that with the foreign investment banks, then try to find the local investment banks. They have their units, and see what you can do. But like anything else, there also you can say, look, I want this opportunity, I'm ready to do anything for you, I have these skill sets, give me an opportunity. That should be the approach. And I think it works. It will, somebody somewhere will find, yeah. But I will say one last thing. Investment banking internationally, and I think you said that, and investment banking locally are two different things. So just because you got into, say, ICICI for investment banking, it doesn't mean you will do an investment banking tomorrow with Morgan Stanley. Right? It seems to me that the people in finance in this audience seem to be very happy with their jobs and have no questions. Okay?
So I work for Reliance since 8 years. I have been working with Reliance, and I have recently left my job. And I'm doing a course in C# .NET basically. So
C# and?
C# VB.NET.
Okay.
That I have done this thing XML, JavaScript, and I've done SQL also. So right now I'm looking for a change basically. Like I want to integrate technology to my trading skills, whatever I'm having, and I have knowledge about trading into international exchanges, futures basically, commodity, forex, and plus I have experience about technical analysis. So I want to get a move in my career. So how should I move forward?
Before I answer that, let me tell you the story of a man I know. I mean, I don't know him personally, who worked for Merrill Lynch and who was a trader and decided to get out, and he built a system and for the traders, and he said to Merrill Lynch, look, I'm going to do this, do you want to put some money in? And Merrill Lynch didn't believe him, so put very little money in him, and he went out, and now his name is Michael Bloomberg. Okay? The man is worth billions of dollars, and he spends almost $1 billion per year in charity. The reason I brought this up is this. Frankly, when you were telling me, I found no reason to leave the job. Okay? And if you wanted to do what you said you want to do, then it should have been for building a business, a product that will do that. Because, frankly, if you want another job, so people want the experience more. That's my feeling. Okay? They don't necessarily, in India, I know people like to get one degree after another. I have a cousin here who has like 12 degrees. But especially in finance, people want to know what is your experience, what can you do. So, if the way I would see is I would learn all the technical skills you are after, but not leave the job. And that is not for money reasons. It's more to know where the need is. So if you take all your technical skills and you know finance, right, you can say, hey, the world needs a product, just like Bloomberg. You may not be Mr. Bloomberg, you may be somebody else, but you will have a product to sell. Now, when you finish this, the IT people will say he has no experience, and the finance people will say he's more interested in IT. So your challenge in my mind is to put all of this together yourself, or find somebody who believes in that.
I know, that's why I've developed a product. I've sent it for a copyright, I've filed it.
Super.
And I've got this thing, I've got my daddy number also. I'm just waiting for the certification. And the second thing actually why I left, because I always had interest in trading and I have a good track record also. Whatever world championship competition was there, all over world I came out 6th in the trading championship, DOS Bank and Sapphire trading championship competition and all these. I had good positions up there. I have managed funds. I have given good return to the clients also. But the company, my boss told me you have to shift to sales because business was not there. I could see, since so many years I am into trading this thing up here. Give me something analytical. If you tell me to automate some processes or some trading systems, I can do that. But forcefully is saying you have to come into sales. I told okay. Then I'm putting down the paper. After that, so is it worthwhile like what I'm going through, or should I do something else?
See, if you're building a product, don't confuse it with Quant and this and that. Though it may be in your heart, you have to go and see where the market is. Like any other business, you have to have a business plan. Okay? Looks like a very successful trader, but what that means, you know what a trader wants. Okay, that was the key of Bloomberg. Nobody can design today with all this a system like Bloomberg. Okay, he has thought of everything a trader wants, everything. So if you're building a product, think about how to finance the product, how to market the product. When you build a product, you want to know what the demand is. If you do that, you will be the Bloomberg from India. But don't say I'm doing this because of it. He has tremendous amount of analytics in Bloomberg. But that's not the way he started it. You have to firstly know the need. Jaisa ki hai na, you show it to any other trader, he would say, I want this. If you can do that, then that is your direction. Your direction is not whether I can put a model here that will discount by another curve and this. That's not your business. Your business is to build something that every trader says, I would like to have that. Haji.
So I have been close to about 15 years of work experience there, primarily in the financial markets.
Excuse me, but you are a trader, right?
I used to be a trader there, of course. Now
Show it to him, your product, Mr. Second Row. Show it to him. Let's see what he says. Then you will know. And you know he's very skeptical. So he will tell you what he needs better. I'm sorry for the interruption.
Yes, that's all right. Okay. So I started off, managing a front office desk there, worked on, the trading platforms of NSE and BSE, and later on I worked with multi-commodity exchange for close to 3 years, primarily to their trading department. Trading people all across.
Can you just speak a little slow?
Yeah, okay.
Because I'm trying to pay attention.
Okay, I'm sorry. So I was part of the MCX training department there, training people all across India, for potentialities there in commodity derivatives. And later on there, I was with for the past 7 to 8 years there into again training for operations for investment bank. I want to over the past 3-4 years there have this urge of having a career in financial modeling, valuation, and research. But what I have seen is that my total of years of experience in the industry is kind of posing a major constraint. Because most of the people there, they'll be looking for young people, and of course, as one of the gentlemen already told that they will be looking for people there from institutes like IIMs and all for that kind of job. So at this stage of my career, first of all, I want to ask from you is that what is it that I can do, right? And whether this will be the right move.
Okay. Frankly, I am confused, and I have met a lot of people who made a good career in IT and some other fields and want to come back to Quant because their educational upbringing was Quant. They were not as emotional as you are in saying, I have this urge. They were saying there is better future in finance than in IT. It's not easy to answer that question, because if you are new to the finance, you may have to take some way back and then go. Frankly, I know I'm not advising you as well as I should, because I started my career as a quant in production planning. Then I moved in market research. I still was a quant, but in market research. And then I moved in finance. And all these moves happened because somebody felt I could do that. Okay? So I didn't have to. But it's not easy to make a move at a reasonably senior level into finance if you don't have that experience. But you also then have to have some idea about what do you do about IT. And the answer is something, I would say, close to working in some finance group as a support. Somebody mentioned here who supported the front desk. Was that you? Front desk support. Working with the front desk. Who is here? Okay. So I'll tell you one of my friends who was an IT type guy. Okay. But he took a job supporting the front desk guy, the trader or whatever. He's up front there and he's betting and he needs help. So you say, look, I know Excel and I know there's macros and I can put these models. You do have to do some work on the modeling. And he say, I can help you, because he is making a decision in minutes and he himself cannot do that. So you help that, but as an IT guy, not as a finance guy. But you are working very closely with a finance guy. And soon enough, him or his friends around will say, we can pick him up to do this. And this friend of mine, by the way, built a huge database for him of all the securities and the clients, and eventually, in fact, he started his own trading. So there are ways, and they don't just happen. There's a lot of work you may have to do to find the right person. But I am not comfortable in saying to you, कि भाई ये IT छोड़ दो. Even this gentleman, when he was leaving finance, he had to have ways of saying, what am I going to do with that if you move in finance? Okay? It looks like Professor Biswas has no questions.
This forum is for the students.
I know. Haji.
So, I'm Gaurish Bagatkar. I'm a recent MBA pass out, 2013 pass out.
From where?
From IIQ Institute called BTV's Institute of Management.
Okay.
Then I did my financial modeling from IIQF because I felt that Excel skills are needed at most, and I had a liking for valuation subject in finance. I had a professor who made us, who told us to make a model for companies. He directly gave us the companies.
Model for
the equity analysis.
Okay.
I was given Jubilant Foodworks. At that moment, I had no idea how I'm going to go about it, and I made a rough model which was not at all presentable, but somehow with his help, I managed to do it. Then after joining IIQF, I again redo it, and then I made a proper full-fledged model. But my question is, right now I'm working for RBS. I'm working for a KYB process for the UK division. Because I had no such references, because nowadays things work on the references. So, and as he mentioned earlier about that the green jobs are given to those who belong to the IIMs or the IITs. So my question to you is, how to go about in my career, because I have a banking ops background now. The work ex would count for banking ops. And in case if I plan to do my CFA or an FRM, which would require 2 years work in that particular area, if I clear those exams, would I be considered for those jobs? That is my question. Or can you just suggest how to go about by doing small certifications or just move the ladder?
The quick answer is yes. People do value CFA or FRM or Quants and so on. So I would say in that sense, you are in the right direction. Okay? But I cannot tell you any more than saying that your communication skills and your verbal skills are a lot more important. Every Indian, as I was saying, says I take this degree and I take that degree, and they are valuable. Please don't misunderstand me. But if you want to compete an IIM guy, and you don't have the communication skills either, because he has already proven himself academically far superior, then you have to have communication skills. You have to make him feel that you understand the problem very well and you have the right answer. So somewhere in everything I hear, I think you guys will go back, and tomorrow if I ask you, you will still not think communications is that extremely important. And when I say communication, the guy has to feel that this man knows what I'm saying and will do it. When you talk to me, the way you talk to me tells me you need to improve your communication skills. Your speech goes like this, then at the end nobody even understands what you say. You see what I'm saying?
Yes.
So these skills, if you find some classes, go out and get it. But though you are doing all the right sides on the skill set, on the other side, and if you are talking about another company and foreign companies, this becomes very important. क्योंकि ये ops वाले जो लोग यहाँ पे आए हैं, they are not necessarily academically that high. So they value only communications. That's why I am saying this. है ना? Okay.